Hi everyone, my name is Cristina. I'm a member of Center for Complexity Studies. I'm an engineer and a crypto enthusiast. I'm very happy to be here with you today in this mini Atlantykron session, and I thank Heather and Peter for inviting me. I'm very sorry I cannot be live with you. Actually, this is a pre-recorded video, but I will try to answer all possible questions regarding the cryptocurrency area. And for any other things you might want, any other details, you will be able to contact me via email or social media, and I will leave the link and the ways you can contact me at the end of this presentation. So today I'm going to tell you a few things about the crypto market, and I will cover two main aspects: the technology behind cryptocurrencies, especially Bitcoin, and the investment part. I'm going to try to answer some of the most common questions I get on this subject. And the very first question that I always get is what's the deal with Bitcoin, or what's the deal with cryptocurrency? And when I go deeper into the subject, deeper into the talk, I almost always discover that the real question is, can I become rich if I buy cryptocurrencies, or should I invest now in this asset, or should I buy Bitcoin now and make some money, make some profits eventually yesterday? This is why I told you that I'm going to cover the technology, but also the investment part, because I believe most of you are interested in this area too. Nowadays, there is a myth around digital assets that you're going to be a millionaire, you're going to become a millionaire overnight. And this is because we are now in a bull run, and I'm going to explain you what this bull run means. But essentially is that people see the prices of cryptocurrencies going up. Is this sustainable in the long run? We shall see. So, what is Bitcoin and how did it appear? First of all, Bitcoin is a digital, decentralized currency, an alternative to the existing financial system. By digital, I mean it is based on a software protocol, and its existence is entirely in a computer network. There is no physical thing that you can hold in your hand and say, look, this is Bitcoin. By decentralized, I mean there is no central authority to control it. No bank, no government, no entity, no company or person or whatever you want. No central authority. How does it work? We shall see. As an analogy, information before the internet was centralized. You had to read a newspaper or go to a library in order to get a specific sort of data. In the internet era, information is decentralized, sort of. But the idea is that anyone can create the information and consume it. Bitcoin is a peer-to-peer payment decentralized system, meaning it allows people to make transactions directly without the need of a third party. For example, in the traditional financial system, using PayPal requires you to trust PayPal's ability to make your transaction. Paying with your MasterCard requires that you trust MasterCard, your bank, the recipient bank, and eventually a third-party payment processor that is going to actually make your transaction. And all these things require some fees, of course. Even using cash requires you to trust your government or trust the government that has issued that currency, right? Bitcoin is different from traditional fiat currencies as it is not backed by any government, any central bank, any sort of centralized authority. It is not controlled by someone. Instead, it is created, stored, and distributed digitally on a public, decentralized ledger that follows a strict set of simple rules. I also mentioned Bitcoin was an alternative to the existent financial system, and you have to understand that its purpose was not to replace our current financial system, but to offer an alternative. Why is that? Very briefly, I'm going to go back to a few events in our history to give you a picture of the context in which Bitcoin appeared. Money was invented as a need to replace or regulate barter, right? We needed something that was easy to carry and could be changed everywhere. So what we know is fiat money, dollars, euros, whatever, have appeared. But people had to trust them. In order to do that, at the very beginning of the American dollar, for example, those dollars were backed by gold. Why gold? Because it is a precious metal in a finite quantity. No more gold than the American bank was not able to issue more dollars, okay? This was possible until a certain point when the first financial crisis appeared, and the bosses in the government and in finances said, well, dollars is trusted enough, we don't need gold anymore, we don't need to back it with gold anymore. And what can we do in this context? Well, we can print some more dollars. And here is how inflation appeared. Central banks decide to print more money in order to save the economy of a country or in a certain area, and take into consideration that printing money nowadays is not a physical process, but it is a digital process. All that happens is to change some digits in a server that manages the entire economy. Of course, things are more complex than what I've described, but in order to get a big picture of what's happening, this is the whole idea. But the question is this entirely bad? Well, certainly not. But you have to understand that there are some people, intelligent people, but just a few, that have the power to decide some things about the money you operate with, the value of your money, how it goes up and down, how inflation goes up and down. Now, imagine you are in 2008, in the middle of the financial crisis that we all know about, and someone comes with an article, a paper, where he says, well, here is an alternative to the central bank's control over your money. This is a currency powered by community, it is permissionless, so no control by anyone, accessible to everyone in the world, transparent, with low fees, unlimited supply. What do you think about that? More specifically, in October 2008, someone called Satoshi Nakamoto released what we know today as the white paper of Bitcoin, where he made such a proposal. Was Bitcoin a new idea? Well, not really. There have been other attempts in the past to create a decentralized currency, but this Satoshi Nakamoto managed to solve all the potential flaws of such a system, because there have been a lot of things that were not solved in the past. So Satoshi Nakamoto managed to solve those issues. Some people were interested in this, and in January 2009, Nakamoto put in practice what his paper said it was possible. He created the first digital decentralized currency named Bitcoin and made transactions. For the next year, he gathered a community around him. People came and said, okay, this is a great idea, I want to be part of it. And they helped him develop this whole ecosystem. Bitcoin was a program, an application that was running on many computers with an open source code that everyone could see, could analyze, could make improvement proposals for it. The community was analyzing those proposals and were choosing to adopt them or not. And during time, Bitcoin had many improvements, but the core idea of this digital payment system remained the same. I should mention that Satoshi Nakamoto, the creator of Bitcoin, remains anonymous. He made this whole thing, this technology, a sort of people's money run by everyone and no one at the same time, and he gave it as a gift. He disappeared in 2010. We don't know if Nakamoto is a person or a group of people, if he's dead or alive, and actually this is the least important thing in this new technology, new thing. New payment system. But how does Bitcoin work? Well, Bitcoin is based on a technology named blockchain. In a nutshell, a blockchain is a growing list of recorded data called blocks that are linked using cryptography. In order to understand what a Bitcoin is, let's think about a Monopoly game with 4 players. But at the beginning of the game, instead of receiving Monopoly money, each player receives a pen and a notebook. On the first page, there are the initial balances that all users have. Let's say each player has 10 monetary units, let's say 10 bitcoins. The game starts and the players win or lose money according to the dices and the Monopoly rules. When the first round ends, each player is gonna write down the new balances of all the other players. After that, they check with each other. Do you have the same balance as I do? If there is a consensus between them, between the 4 players at the end of the round, they can move on. They resume the new balances and write that summary on the header of the next page. The first line in the next page is a briefly summary, let's say, of what happened in round 1. This second page would correspond to round 2, where they are going to write down the new transactions, the new balances. They're going to check again, make the summary, and move on. Why did I mention the summary? Because I could have missed it. Well, for you to see the linkage between the pages from the notebook. Because now you can think the notebook is the blockchain and each page in it is a chain. These chains actually in the blockchain are linked through powerful yet simple mathematical functions. So why Bitcoin is decentralized? Because this ledger, the Bitcoin ledger, is kept, like in our Monopoly game, by the users from the network. More specifically, this ledger is spread on many computers around the globe. And everyone is able to see every single transaction that was made on the network. Even if you're not a user, a player that holds his own notebook, you're able to go through the pages and see what happened. So this is, in a few words, the blockchain of Bitcoin, but you should or probably already know that Bitcoin is also a currency. And you must know that Bitcoin was designed with a limited supply. That would be around 21 million Bitcoins that will ever be created. Once this limited number is reached, no other coin will ever be created. Mining is the process through which more Bitcoins are created. In order to maintain all the network that we have talked about and write transactions, users get rewards in form of Bitcoin. It is estimated that the last Bitcoin will be created in around 120 years. And although mining is available for everyone, even for you, at the present moment the process is very expensive in terms of equipment and electricity. As more and more people came to the network, the mining difficulty was adjusted, so every new Bitcoins are issued every 10 minutes. So we can say from many points of view that Bitcoin is the intersection between software development, mathematics, economy, psychology, and social sciences. Many people consider Bitcoin very similar to gold, and they have their reasons. In the beginning, there were many coins and everyone could participate in the process of creating them because there were not a lot of miners who were competing for the rewards. But similar to gold, at the present moment, mining Bitcoin is done with very expensive equipment. It cannot be forged, no one has total control over the coins, and the price is adjusted by supply and demand. Does it sound very similar to gold? Well, probably it is. But many people consider Bitcoin the digital gold. But how can you as a user make a Bitcoin transaction? Okay, you don't have to own a notebook, you don't have to own a ledger in order to make a transaction. But what do you need? Well, you will need a Bitcoin wallet, which is a digital piece of information that contains a public and a private key. These keys are some strings of random characters that are mathematically linked. In other words, you've got a public key that everyone can see and might look like this, and you've got a private key that should remain private. This private key is essentially to remain private because everyone who has access to your private key has access to your funds. In other words, can spend your Bitcoin, or take into consideration that everything I say about Bitcoin is also true for any other cryptocurrency in the world, okay? So, in order to use cryptocurrencies, you will need a digital wallet, and you've got to keep your private keys of that digital wallet safe. But regardless that, this is all you need. I mean, you need these two keys, the private and the public key, in order to make transactions with cryptocurrencies, with Bitcoin. So there is nothing else, no personal data, nothing else that you would need. As an analogy or as a comparison, let's think about a classical bank account. You've got an account number which is unique as your private and public key. a balance that indicates the available money and the transaction history. Exactly the same is for the blockchain network. Exactly the same is for Bitcoin, for a Bitcoin wallet. But here come the differences. A bank account has associated personal data, name, address, ID, phone number, whatever. On the blockchain, an account has associated that pair of keys, the public and the private keys. These use mathematical functions to ensure the security of the network and the honesty of the transactions. Okay? In the case of the bank, there is a database where you can find all the accounts and all the transactions that were made. This database is kept on a local server, on a central server, and is maintained secured by the bank's rules. With Bitcoin, the ledger is kept by the users that support the network. In other words, the ledger is stored on a lot of computers spread all around the world. The bank register, the bank database is private, the Bitcoin ledger is public. You can see every single transaction that was ever made. When you see things like that, you might think, well, Bitcoin is anonymous because there is no linkage between my face, my name, my ID, and my Bitcoin wallet. Bitcoin transactions are anonymous, you might say. Well, you are half right. A Bitcoin address is a string of around 30 characters randomly generated. This string does not integrate any personal data. When requesting a transaction on the network, the protocol verifies some previous transaction and it has an inner way to validate that the sender has the needed bitcoins and the authority to send them. But this is all. There is no direct link between an address and the name of the sender, okay? On the other hand, every single transaction on the Bitcoin network is publicly available, so anyone can access it. This is why there are ways to make connections between addresses and owners, as there is public data to correlate. And this way, using digital assets for illegal activities, it's not precisely easy to do. Besides this fact, when you trade Bitcoin, when you pay with Bitcoin, okay, the transaction might be anonymous. But if you want to buy Bitcoin with fiat money, meaning with dollars, with euros, or any other local currency issued by a government, you need to provide personal data. Just like when you open a bank account, okay? There is this KYC procedure, which means know your customer, in order to avoid money laundering and illegal activities. So we are saying that Bitcoin is pseudo-anonymous. If I give you a Bitcoin address and you send me a small amount and I buy some coffee from a provider, then that transaction might remain anonymous. But if I want to buy a car with Bitcoin, with the Bitcoin that someone sends to me, then I will have to provide personal data, and yes, there is a connection, there would be a connection between my Bitcoin transaction and my ID. What else you should know about Bitcoin transactions, about how the system works? That transactions are not reversible. Okay, fiat transactions can be reverted because there is a central authority that controls them. In the case of Bitcoin, there is no one that can restore money from one account to another. Once a transaction is written in the public ledger, no one and nothing can turn it back. So if you make a mistake and you send by mistake some Bitcoins to the wrong address, there's nothing that can be done. So in this context, there are many people that say that Bitcoin meets the three features of an ideal currency. It's not under the control of a central authority and it cannot be manipulated or printed at someone's will. The currency can be used, this currency can be used worldwide. This means that if you don't have access to financial services because you live, I don't know where, you can still use Bitcoin. Also, Bitcoin is apolitical. It won't favor a particular system or group of people because Bitcoin does not have an SU, a founder. It is based on the community consensus, okay? Another question that I hear very often is, why is one Bitcoin so expensive? Well, the price of this coin has constantly grown if you have a look at the whole history. It had variations and big variations like any other asset, but overall its price has always been growing. This is because more and more people and companies choose to adopt Bitcoin as a payment system and trust it, and its price is adjusted entirely by supply and demand. No one can control it. Okay, here are some discussions about people that have a huge amount of Bitcoin that can have an influence over the market, but that's not the whole point. The whole point of the technology is that it's not controlled, and the price of this currency is adjusted simply by supply and demand. More than that, as I mentioned earlier, the amount of Bitcoin is limited, and if the demand increases, the price grows. That's true for any other asset. And until now, the popularity of this cryptocurrency has constantly grown, so the price went up. What about other cryptocurrencies? Because until now I talked only about Bitcoin, because this was the first. This was a proof of concept that works. And after that, this whole ecosystem based on blockchain was developed. All the other cryptocurrencies, except for Bitcoin, are called altcoins, meaning alternative coins. And all of them are based on the blockchain technology. In this context, you have to understand that the blockchain technology is for Bitcoin what the internet is for the email. Bitcoin is just one application, okay? And this perspective has greatly excited the crypto community in its early times, and they have asked a sort of obvious question: what else can be decentralized? There was a multitude of answers, and maybe one of the widely known and best example is the voting system. Nowadays, the voting system needs a central authority that you have to trust that it will correctly count the votes. With a voting system based on the blockchain technology, you don't have to trust someone that will correctly count the votes, because all the system is going to be transparent and it's going to correctly give you the results instantly, okay? Another example is the recording of property titles and values, but also social media platforms. Those are based on central servers that control every single data that we upload or we just provide using applications and setting the needed permissions, okay? All these examples can be converted into decentralized systems, okay? This way people would have a lot more privacy due to this technology that cannot be corrupted, and allows everyone to be an active user and contributor. Does it mean that everything can be decentralized? Well, no, because it's not worthy. Yes, it can be decentralized, but it's not worthy to decentralize every single thing in our life. In this context and in these examples comes the importance of Ethereum, the second most known cryptocurrency on the market. What exactly Ethereum is? Well, it is a do-it-yourself platform for decentralized applications. If you want to create a decentralized application that no one can control, not even you, after it is launched, all you have to do is learn a programming language and start to code your application. And this is quite simple nowadays. The main goal of Ethereum is to decentralize the internet and actually our lives as much as it can. Why is that? Well, currently, everybody can create a website where they can post all sorts of information, but still most of the internet is controlled by big corporations such as Amazon, Google, or Facebook, let's say. There is almost no activity on the internet that does not have a third party to mediate that information. Using blockchain, the communication between two persons is not mediated by someone or something that also has access to the exchanged information. For example, you can directly rent digital disk space to other people, just what Dropbox is doing now. Another example is with drivers directly offering rides to their passengers. That would put on hold services like Uber, because there wouldn't be a need for a central application to do that. To summarize, Ethereum allows people to directly connect each other without the need of a central authority to mediate the communication. Ethereum works with smart contracts. Actually, Bitcoin also works with smart contracts, but Ethereum has a lot more complex smart contracts. Actually, a smart contract is a set of rules that are progressively executed as certain conditions are accomplished. Okay, this is very similar to a contract from the real life, but it is entirely digital. As an example, imagine you use a smart contract to pay the loan for your car, okay? If you pay before the due date, you are able to use the car. If not, it will remain locked at least until you make the payment. The smart contract is the one to make the decisions based on a set of rules defined during the design phase. There are many similar applications that you can think of that can be built on top of the Ethereum network. Okay, this is a sort of second layer blockchain, and you can do all that. I dare to say that these are the main two things cryptocurrency bought: a payment system and an ecosystem to create decentralized applications. So Bitcoin and Ethereum. All the other cryptocurrencies are either variations of these. There are many payment systems that perform better than Bitcoin in terms of speed and fees. I won't go into details, but you've got to know that there are many other cryptocurrencies that do exactly the same as Bitcoin, and one example is the joke Dogecoin. And there are other cryptocurrencies that do exactly the same as Ethereum. They provide an ecosystem that can be far better than Ethereum in order to develop decentralized apps. And of course, we've got tokens, utility tokens associated with those decentralized apps. And those tokens have a specific use. Okay, so this is the big picture of what sort of cryptocurrencies you are going to find in the market. Why do people prefer Bitcoin, although we've got other options that work far better from the technology point of view? There are two aspects. First of all, it was the first, and people know it best and trust it best. But the second is that Bitcoin does not have an ACO, a founder, does not have a marketing department that would say, hello, use Bitcoin instead of fiat money, okay? It is based on community, and this gives trust in it as a payment system. Probably all or almost all the other cryptocurrencies that do exactly the same as Bitcoin have an SEO, a company behind them that runs a few aspects of that cryptocurrency. What else does the cryptocurrency ecosystem provide? Also, in just a few words for you to have a clue, an idea of it, is the DeFi ecosystem. Maybe you've heard about it. What does this mean? Because Bitcoin was meant as an alternative payment system, it can come with other options that we have in the financial system and bring them on the blockchain in the crypto area. More specifically, we are talking about, for example, loans. Okay, if you want to start a business and you want to get a loan, you go to the bank and you say, hello, this is my guarantee, this is what I'm going to do, I need this loan. And the bank, which is a central authority, decides if it's going to give you that loan or not. In the crypto space nowadays, with decentralized finance, you can do exactly the same. You can borrow money, but instead of borrowing it from one person, one entity, one central authority, you borrow it from other people. And this brings the other thing of DeFi. You can provide liquidity, you can provide money for other people to borrow, and you can have an interest based on the amount you have borrowed to other people. Before approaching this area, you should really study it very deeply, because it is complex and the risks are very high. This is a new system, a new idea, and it's not risk-free. Actually, it is a high-risk investment, okay? Talking about investments. This is the second main thing of this presentation, because As I mentioned in the very first beginning, the main question that I get is, in one form or another, should I invest in cryptocurrencies? And you've got to understand that in the crypto space, there are people that come for the technology, okay? If what I've mentioned earlier made you think, wow, there might be some great opportunities in this area and this is going to change our future, then you are probably interested in the technology, and along the way you are going to say, along the way of learning about this technology, you are going to say, okay, I'm going to buy some Bitcoin. But there are also people that come here for the money. And if what I've told you until now didn't make you feel enthusiastic about the technology, then you're probably here for the money. Is this bad? Well, of course it's not. Why? Because the crypto ecosystem, besides being this new technology that is really awesome from my point of view, it's also an investment opportunity. And I'm not going to diminish that. It's for real an investment opportunity that it's in early stages, and you can take advantage of that. So the answer to the question, should I invest in cryptocurrencies now, is yes, as long as you have an investment strategy. Okay? To have an investment means, in the first place, to know what an investment is, and that the crypto market is just an investment tool, okay? As investments, we have three main areas: real estate, businesses, and stocks markets. And stocks markets include cryptocurrencies. These are the three main areas. And this way you understand that cryptocurrencies are just a tool for investments, are not the investment of your life, okay? And if you've never been in any of these areas, you are at the 0 point at this moment. Is this a bad thing? Well, of course it's not. But it is important to know where you are, because depending on that, you can make a correct investment or you can lose all your money. Cryptocurrencies are a high-risk investment, so they generally represent like 10% of an investment portfolio. It is important to understand that. And what types of investors are there in the crypto space? Where we've got three main types of investors, or pseudo-investors from my point of view: the moon boys, the day traders, and the holders. What a moon boy means are that sort of person that has heard about a cryptocurrency, an unknown cryptocurrency, and they hope it's going to be the next Google, and they are early investors. Actually, they hope they're going to make 10 times, 100 times, 1,000 times the invested amount, okay? They hope for big profits, but you've got to understand the probabilities here. When Google was released, it was not the only project from the market. It was not an idea that came like that, and there were early investors that made millions of dollars with it. No, there have been thousands of ideas, just like Google, thousands of attempts to do exactly the same, and there has been just one winner, Google. This exactly the same is with Facebook, and exactly the same might be with cryptocurrencies nowadays. So if you've heard about a certain cryptocurrency and you hope that its price is going to grow eventually in a short period of time, and you're going to make a fortune overnight, well, let me tell you that the probability for this to happen is very low. You can also play the lottery or go to the casino. It might be exactly the same. But the crypto market has a lot more to offer. Remember, I said it was a tool that is similar to real estate investments or to investing in a business. So if your mindset goes in this direction, yes, you can become an investor, and yes, it might worth your time, energy, and money. The second sort of investor that I mentioned was the day traders, and actually it's not about buying and selling daily, but in a short period of time. I mean, being there, seeing potential short-time investments, and for that you might be using technical analysis, and no, you are not going to learn it in a very short period of time. So my news are not the best for people that hope to get rich overnight with the crypto market. At least this is my opinion. This is not financial advice. This is how I see the market and how I've seen people experiencing the market. And I'm going to give you a few examples. The third category are long-time holders, meaning you are investing now and you are able and expect to hold your investment for a long term. Why is that? Because the crypto market, as any other asset, works in cycles. But the difference is that the crypto market is very volatile, meaning in one cycle, Bitcoin can go from $3,000 to $60,000, okay? The volatility is very, very high. Of course, you're not going to buy to the lowest price and sell to the highest price, and you've got to understand that even if you are a holder. But you can minimize your risks as with any other investment, and you can make great profits. Remember, we are in a bull run, meaning that the prices are constantly growing. So yes, there is room for investment, but with small profits. Okay, let's go a little deeper. And what can you do in this context? Well, you can invest a small amount of money, having a clear strategy and being prepared to lose money. What does it mean, a clear strategy? It means that you know when you enter in the market, but also when you exit the market, when you sell a certain asset that you have bought. Because buying cryptocurrencies and seeing the profit, making the profit is very, very easy. To know when to mark that profit and take it, that is really, really hard. And people in this area say don't invest in cryptocurrencies more than you afford to lose. And it's not about losing for real. It's about managing a portfolio and having an investment strategy in the short, middle, and long term. And because, as I mentioned, the market is volatile, you've got room for big profits and also losses. Okay. Let me give you two examples of bad investments. The first one was a guy that was in 2017 in the crypto market. He had invested $50,000. It's quite a lot. But in that bull market, his investment worth $800,000. Okay, his investment was entirely in cryptocurrency, and he never sold. Why he didn't sell? Well, he was expecting his investment to make $1 million, and he said, okay, when I reach $1 million, I will sell everything and get out of the market. What happened is that his investment has never reached that $1 million, and his investment, that $50,000, converted in $25,000 because the market dropped. Why is this happening? Because that person did not have a clear strategy. From my point of view, when you double your investment, you should sell part of it, because doubling your investment is great from many points of view, okay? The crypto market won't make you a millionaire. You've got to understand that a clear strategy will help you understand when you have to get out of the market. Why he didn't sell when he saw that the prices were dropping? Because he couldn't believe he set that $1 million and he wasn't able to sell. The second example that I want to give you is in this bull run with a good friend of mine that has invested a few $1,000s in an asset he believed in. It's an altcoin from top 20, probably. And he said, I'm going to invest in that. What happened was that he didn't have patience. After a few days, his investment was 10% lower and he panicked. Okay, he totally panicked. And he was not prepared for that investment because it was way too much thinking about his entire portfolio, his investment. He was not able to afford to lose that money. And what he did, he minimized the risks and he sold everything in just a few days, okay? So you invest now, you expect it to grow immediately and mark the profit, but this doesn't happen, okay? What happened there is that the cryptocurrency had a correction exactly when after he bought, okay? The price went up, then it had a correction because it's supply and demand, and many people sold at that point. And then the cryptocurrency continued to grow because this bull market, in many people's opinions, is not over. And at that time, back at that time when I tell you this story, it happened probably in February, it was just beginning. But he panicked just because the invested amount was way too much for him. So it's important to understand that you have to invest a comfortable amount of money. You have to have patience, you have to have a strategy, you have to know your product, and yes, you can make profit. Know when to sell. Okay, this is mostly for beginners because people that already have a history in the stocks market or had a business know what risks are and know how to think about minimizing those risks, okay? So what can you do? Let me give you two approaches. Maybe they're not exactly the best or exactly what you want to hear. But first of all, you've got to think about the money you invest in cryptocurrency as burning them. It's not about losing them. It's about having no emotions when you make such an investment. And if you lose that money, it should not be a drama. In this case, you can really become an investor. And I'll give you two approaches, one in the short term and another in the long term. They're not precisely strategies, they're just some starting points to build a strategy. The first one is in the short term. Think about investing $100. And for simplicity, I'm going to give you the example on Cardano ADA, because this is a currency that during the last days had fluctuations between $1 and $1.2. And if you study the project and you believe it's going to be something good for the future, you can think, okay, I'm going to enter ADA when it is $1, and when it gets to 1.2, I'm going to sell it, okay? And I'm going to make a profit of 20%. Is it possible this to never happen? Well, yes, it is possible, and these are the risks, but you've minimized the risk because you've studied the market, and you could see it fluctuating between $1 and $1.2, like, I don't know, 3 or 4 times during this bull run. So there is a chance it is going to have this sort of behavior in the future. This is not a technical analysis, this is not a precisely good analysis, but this is an example of mindset that you might have. Low profits with small investment amount in the beginning, and see how you interact with this market. What are your limits? A long-term investment strategy or strategy point for building a strategy is to invest regularly invest money in this area. For example, during the last 3 years, if you had invested in Bitcoin, and I'm saying Bitcoin because in the long run it is probably the most trusted and the best idea. If you had invested the money that you would spend, I don't know, let's say on a night out with your friends, that would make you quite an amount. Okay, let's say you invest $30 every month for 360 months. You make the calculations, but what I want to tell you is that during these 3 years, you are going to buy Bitcoin to an average price. You are going to buy it when it was, because the example is for the last 3 years, okay? You could buy it when it was $4,000, $5,000, $10,000, $15,000, and on average, the price, your buying price, would have been around $10,000, okay? When the price of Bitcoin went 6 times up, you could sell, and your whole investment in 3 years would be 6 times higher. So we can think of Bitcoin as a store of value in the long run, okay? This is a starting point for a long-term strategy that you can play with, that you can learn about, and that you can implement. Okay, another thing that people always tell me is that it is easy for me to talk, especially if I had the opportunity to buy Bitcoin when it was $1,000, $5,000 or $10,000. But it's not that easy to hold. Okay, and to give you my example, I've entered in the crypto market in early 2017, before the bull run, and I made a portfolio that in the bull run I could see it was 6 or 7 times bigger. And after the bull run was over, my investment, my portfolio went 25%. Dropped to 25% of the initial investment, okay? So we've got an investment that goes up and then drops a lot. Are you able to handle that? Would you still be in Bitcoin at that moment, or would you sell, would you panic and sell in order to minimize those risks? And even more importantly, would you keep investing if you saw such a drop in your investment? If the answer to this question is no, there are 2 options. Okay, either this is not for you, the crypto market is not for you, and that this is completely understandable. Either you really have to deepen how this market works and how investments work. So, is it a good time to buy cryptocurrencies? Is it a good time to buy Bitcoin? My answer is this. The first very best moment to plant a tree was 20 years ago. The second best moment is now. All in all, what I want you to understand that Bitcoin is based on a great technology that is used and that you are probably using, even if you don't know you're using it. And in my opinion, we are going to see it in the future. Cryptocurrencies are here to stay. But this doesn't mean that your investment is a success. This is all I wanted to tell you with this presentation. I hope the information was interesting and you got some points about what the crypto market is, and you made an idea if you want to continue to study and learn about it, or if this is not for you. If you want details, you can find me on YouTube, you can find me on my website, you can send me emails and I will gladly answer your questions, but take into consideration that questions like, should I invest in this cryptocurrency now? It's not going to have an expected answer like yes or no, okay? For Romanians, for people from Romania, I also have a YouTube channel called Guanadgo Bitcoin, where I work with an awesome team, and you can follow the educational videos there. Thanks again for the invitation, Heather, Peter, thanks again, and thanks again to all the team that is behind this mini Atlantykron series and that it's working on that. Have a great day and hope to see you in the next Atlantykron Summer Academy here in Romania. Bye!